Has Bitcoin hit its high? You should be prepared for an immediate price drop in August. Don't lose your money. That's the focus of today's video, and we're going to use technical analysis and Elliott Wave Fibonacci all combined to measure the psychology of the market. So if you like today's video, like, subscribe, hit the bell notification. I'm Jagir, the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro, featured in the best-selling book High Probability Trading Strategies back in 2008, trading currencies for over 15 years, but now we bring that knowledge and wisdom to crypto. So let's dive straight in. So we did a video on Bitcoin, just as a quick reminder, on April 19th. And at the time, we had just hit our 64,000 high. Price was around the 55, 56,000 range. And we did this video saying, look, based on the technicals, which is speaking to us, the patterns are telling us the market is showing weakness, and we would normally see a sell-off of profit taking, and we saw this amazing correction. Well, this is what we're anticipating. I said we should anticipate a three-leg correction. At the time, it seemed crazy because there was so much positive news coming up. There was optimism in the market, all-time new highs for Bitcoin. And here our analysis stated is likely, highly probable, never certain, but highly probable that we're going to get a big correction in this range below 30,000. That's what we said. You can go back and watch the April 19th video. And what happened? Well, the market did an amazing correction to the downside. Like, look at this. We did the video around here, and we said this movement to the downside is likely, and it happened, right? A big movement to the downside. Boom. Based on Elliott Wave and Fibonacci projections, right? Now, we did a video we released it on August 22nd, and we said, look, on a more closer time frame, we can zoom in, and we said when the momentum goes to the next oversold region and then goes down, we should then expect a movement to the downside, the minimum of 3 waves, but that's what we're going to look at today. What is the immediate price action that you want to be aware of so you can protect any profits, but also where's that money going to flow if there is a big sell-off with Bitcoin? So let's dive in straight to a live chart. So now we are zoomed in. We're zoomed in similar to what we did in our last video, pretty much the same here, but the price has been going up. We tagged 50,000 or just went above 50,000, but there's a few key things that we need to be aware of. First of all, we're in this retracement zone of this 50 to 62% of this move to the downside. So what we did was move to the downside, we measured and did a retracement and movement back up. Typical zone is 50 to 62%, and we're right in that zone. Another thing that we want to be really aware of is the weekly chart. Again, we said this in the last video. The momentum indicator is severely overbought, meaning that the blue line and the red line are right at the peak of this indicator, which is stochastics RSI. It measures momentum, and when the blue line goes below the red line, it suggests that the upside should be limited and we should expect sideways to down. And when we combine that with pattern, price, time, and momentum, then there's a high probability that we should expect a big correction. So also what I wanted to bring to your attention, which we began this video with, was this pattern here, right? This is called a fifth wave diagonal, right? This here shows weakness, right? This higher high is being made, but it was with weakness. And this is what we're seeing here again. We are seeing it here again really, really clearly. I say clearly if you're used to this stuff. Higher high is being made, but with weakness. You know, there's a big part of strength. This movement to the upside here was really good strength, but then it's running out of power. You can see it's running out of steam. It's like the buyers are running out and the sellers are going to take over. So we should see a high probability of a downside movement. So let's just do a couple of other Fibonacci key price extensions. What we're going to do is we're going to measure this low to this high. This is like a wave 3, wave 4. And we've got this price zone. It overlaps with the other retracements. And we're going to do the same thing again on this lower time frame, which looks like a wave 3 and a 4. And what we're going to do on this one is we're just going to take the key retracement, or the extension, should I say, of 100%. And this one we're going to get rid of as well. And then this one we're also going to get rid of as well. So when you get a cluster of Fibonacci price You know, there's one other one as well, which is a Fibonacci extension. So price external retracement. I meant external retracement. This one here, and the key one is going to be 1.272. You'll see that's in that range, and 1.618 is in that range. So we've got this really key price zone. There's a lot of things indicating to us that we are reaching what looks like to be an ABC high. When I say ABC, this here is a very irregular ABC high. And if this ends up being ABC, what should we anticipate? Well, definitely a minimum. I say definitely. High probability of 50% correction, but it's likely we're going to probably see a deeper correction. Yeah, that's what typically follows a fifth wave diagonal, a deep correction. We want to be very, very aware of this. Now, quick caveat. When we saw this correction here, money flowed out of crypto, right? And it devastated the whole markets. Everything pulled back 50%, 60%, 70%, some even 90%, 95%. And believe it or not, because these are young projects, that's normal behavior. When there's pessimism in the market, fear, uncertainty, and doubt, people panic sell. But this part here, what I believe is going to happen, if there is a correction, all that money that's currently tied up in Bitcoin will more than likely flow into other altcoins. The coins that have shown real good strength in their projects, the technicals, but haven't really taken off yet, we're probably going to see money flow into the younger projects. So let's now just break this down. I think we're near the high over here. We can be confident that we've got the momentum showing. I think it's here. When the blue line crosses below the red, we should anticipate downward movement. So we're close to this point here, right? This is what we were saying. This is what we was looking for from the last video. We said we should get the momentum, wait for it patiently to go to the overbought zone, and then that next bearish reversal, the pattern price should coincide. So we did have another high being made, which was this 50,000. And look, the number 50,000 has a lot of zeros. And when there's a lot of zeros in a number, there's something called psychological resistance, and that can provide a lot of resistance. And even though we broke above it, and that caused a lot of people to get optimistic, you know, Bitcoin's breaking 50,000, it's a key thing. But it wasn't breaking out with strength. It wasn't with strength. Look, it's almost tagged it. What's the price today? It's like 49,700 right now. So we just, you know, we have to go to a candlestick bar to really look at the 50,000. If we kind of zoom right the way in, we've got to look at this. The price 50,000 is, yeah, like here, but it didn't close above 50,000. It was struggling. When there's a long wick like this is an uncertainty bar, which we're not going to go into too much detail today. It's more saying, right, what's likely to occur next. So we want to look at it in two phases. First, we want to go, okay, if we're wrong, what's the minimum that should occur, right? The minimum that should occur. So when I say if we're wrong, so my opinion of the market is we should get this final leg of the correction, which is this movement to the downside. Hey, I don't want that to happen. I'm an optimist. Love Bitcoin, love crypto, and I want to see this new influx of money into the space. Let's just move back to a line chart as well. However, we need to be objective, mechanical, and just look at the core facts. So we've got to look at it in two phases. One is, all right, if you're wrong, what is the minimum that we should anticipate? Okay, the minimum that we should anticipate, if this ends up being the high, let's just say today's price was the high, what should we anticipate? We should absolutely anticipate a 50% correction as a minimum from this low to this high. This is more relevant now because of where the momentum is, and this final leg, which looks like a fifth wave diagonal, is forming. We should anticipate a minimum of 50%. Typical maximum is 78.6%. And in between is 62%. So I'm just going to drag this across to here so it's nice and clean. And then if today was the top, typically that should take 50% of the time it took to form this wave one. I'm calling this a wave one. It's like a final wave C of a wave B. I'm just going to put this here. So now this gives us a clear minimum if we're wrong. But if I had to bet on this today, if I was shorting this today, I would be looking to take profits or adjust my stop loss in this range. But really what I would anticipate is some type of reaction similar to this initial reaction. Then I would anticipate another correction to the correction on the way up, similar to this one. And then anticipate on this occasion actually 3 more waves. 1, 2, and then a 3 to finish off this correction. Similar in a way to this here. This movement here, boom. We had a final reaction here. And that was a 5th wave structure. And that's why we called it a wave A. And a wave A and a wave C tend to have a really direct relationship. And the relationship is often 62%, 100%, or 1.618. In this instance, again, we don't know at this phase because we need a bit more data, but I would actually anticipate if we measure this to here, we project it from this high, the number that I would anticipate is the 62%, which is right down here, right? Right down here. We want to be aware of the 100% also. So what we're going to look at is here, this price range. Again, I reckon it's going to be a triple bottom. What I mean by that is if we take this low here, you can see we've got our first bottom here. Well, this what we're calling a wave 4. We've got this second one. We've actually got, it's kind of like 2. Boom. Oh, let me just go here. We've got this one and this one, but let's just focus on this one here, or even both. We can call it a quadruple bottom, I guess. You know, showing very, very strong support. And then we should get a final one here. So this might end up being something like this. If I can get this. Yeah, here we go. Something more like this. Some type of moves to the upside. And then a final little leg over here. Yeah, hopefully that's making sense because we've seen it already. So what we're looking for now, let's just clean this up a little bit so we can summarize, is want to be very, very aware of this here. This here. This is a key, resistance, 50,000. We've got pattern, which is this is a 5-wave structure. We've got a 5th wave diagonal pattern. We've got momentum. The weekly is severely overbought. So I'm looking in this top left-hand corner over here. If I just make it large, this momentum indicator is severely overbought. So we've got momentum. And we've got something called time as well. Let me just do the time analysis for this here. Going from this high to this low here. And you can see that we're really in this zone over here. And there's a few other factors as well. So I think we've got enough information that we can be have to kind of be a bit, I'm an optimist, but we have to be pessimistic about this. We have to go, all right, what's the worst case scenario? Well, first, if we're wrong, I'm going to reiterate, expect a minimum in this range. What's the price? The price is 40,000 to, again, let's just clean this all up now. Let's just clean it up. Let's just get rid of this. To 34,000 as a minimum, 40,000 to 34,000 we should anticipate as a minimum, but we'll probably see a retest of this low down here, which is around the 30,000, 29,000 mark, in and by. Let's just measure this here. Well, I'm giving you a rough date here. The most typical is going to be this range here, between this and this. I would say down here, we should anticipate a minimum time of October 5th, sideways to down. So that's over a month, 5 weeks, give or take, to the end of October, sideways to down. But this time, rather than it suppressing the whole market, because this optimism is coming back into the market, Cardano's launching this this blockchain is getting, is moving to that phase. You got IDOs coming back and getting more aggressive, more projects being launched. That money from Bitcoin is likely to flow into these other strong projects. That's just the nature and the flow. New money, retail investors often refer to as dumb money. You know, it might refer to us in that sense, you, I, dumb money. But you want to be aware of what is the smart money doing. The smart money normally takes profits at this kind of phase, and it's normally a steep profits. So the sell-off doesn't reflect Bitcoin, doesn't reflect belief in Bitcoin. It's just short-term voting, short-term profit taking that's likely to occur. So look, is it guaranteed that this is going to occur? No. But the probability is on the side of, right, we should anticipate a relatively steep correction in this zone. We can do one other thing. Should we do one other thing? We'll do something that's a bit more advanced. I got my masterclass, by the way. It should, I'm pretty sure it's ready now. It should be in the link below. If it's not, it'll definitely be in the next video. But check out this video in the link below. My masterclass on Elliott Wave and Fibonacci, how to read the charts like I'm the way I'm talking to you. Because the challenge I have is often you ask me for mini coins, and I only do 7 videos normally in a week, 1 a day. But there's 10,000 coins, over 10,000 coins out there. So I've created a masterclass for you. So now let's just get rid of this. Let's just do one last thing. We've done this time analysis. I'm gonna do this for you. There's something called rhythms, right? Time rhythm. And what you'll find is every chart has a rhythm, and we can assume that rhythm is going to continue until it changes. And what I mean by rhythm is low to highs, low to highs, high to lows, and low to lows is what we're going to focus on. I'm just going to quickly do this. So this low to this low, the time taken is this amount of time. Right? I'm going to draw it visually. The low to low from this point to this point, the time taken is this amount of time. The low to low is here to here. The low to low from here to here. From this one to, we have to make a judgment call on, is this the low, is this the low, is this the low? You know, my judgment call will be, this is quite significant. We want to be aware of this low to low, here to here as well. Bit of a outlier. Well, actually, I'm going to take it from this one to this one. We've got a low to low from here to here. This will make sense in a second. And what you basically do is you then project the next low. When is the next low going to be based on the average time taken from this low to these others? So now we can put these all here like this. There's a few ways of doing this. I'm doing this the visual way, so sometimes it's confusing if I do it the other way. Not for me, but more for you watching. So we're going like this. So what we're saying here is we should anticipate the next low in this region over here. So we should expect a steep decline. Again, we got to take a few other things into account. Is this counted as a low? Is this counted as a low? I'm just having a quick broad look. Yeah, so I'm going to actually take it from here now. So for this low, so I should, this I don't normally do this. This can be very, very powerful, very, very powerful. You see, these will pretty much coincide, right? So what we're looking at is the next low should be actually in this kind of range. And what does that mean for us? We should anticipate a minimum of 3 waves, and we'll probably get the first one in this time zone. This is very crass. I haven't done it very accurately. I'm just doing it quite fast. But by, what's the date here? Just looking at the bottom. 17th, so 3 to 4 weeks, we should get the next major low. And then, you know, we'll get another movement to the upside. And then from this point here, we'll probably get the next low in this zone. And then we'll be able to evaluate the market at that stage as well. So definitely sideways to down for the next 2, 3, 4, maybe even 5 weeks to anticipate. So there you have it, right? Bitcoin, have we seen a high? I believe so. It's not the ultimate high. Do I believe Bitcoin is still going to hit 100,000 this year? I do. But I believe a correction to this big move to the upside is due. I think we've got enough information and it's clear enough to anticipate a minimum of 3. but just be prepared for a steeper move to the downside to retest this 30,000, 29,000 range before we go on to see all-time new highs being made in the market. So if you like today's video, like, subscribe, hit the bell notification. Let me know what you think. Are you bullish or bearish on Bitcoin? You know, bullish that you think, no, Jagir, I believe, because a lot of people are saying this, right? We're just going to continue seeing the upside now. Or actually it makes sense because, you know, people were saying the same thing over here. When we were getting this movement to the upside, people just thought it's going to continue going. And on our April 19th video, we said, look, it's unlikely. It's unlikely. We're due a correction. We can see the momentum is running out. It's running out of steam. So if you like today's video, like, subscribe, hit the bell notification. Hope that was valuable for you. I'm always trying to be optimistic, but we need to be realistic also. Losing money is a real thing, and you got to protect your profits and protect your downside. And if you're looking to buy for the first time, it might not be the best time right now because you don't want to jump onto a moving train. Wait for it to get back to the station, which is often that correction. Get on whilst the market is not so optimistic. And then when it takes off, you're already on the train. And that's where you can make some really, really good returns. I will see you very soon.